But 14, we ended the week on a holiday on Friday, and we'll be starting the week on Monday with a holiday as well. So we'll probably be waiting for the new batch of CFTC data. But I'm starting to have a look at the inflation expectation. They've been continuously raging higher. Last month there were a few times where we thought it was about to top out, but it's continuously finding higher highs, and it is underpinning most of the yen pairs, as well as inflation expectation is a great driver for yields and has an inverse correlation with yen, which tends to put some fire on the yen pair. So we're expecting for these to continue climbing until something happens here and starts dropping off. Next week is a shortened week, starting with on Monday is a bank holiday. We have US ISM services. Being that it's a bank holiday, probably will see a bit muted price action, but more interesting things happen in the following morning when we have the RBA statement. The basic thinking is that RBA has got a reactionary policy going on right now, and they'll be sitting put for quite some time. So if you're trading AUD, you'll be trading it against obviously other pairs, and you will be taking your cues from the other currency or the other counter where a certain pair will be heading. In the short term, Australia has got a little bit of headwind where China said they'll be cutting back on the steel production, which also will mean then reduced imports from Australia in terms of iron ore and probably coking coal to heat up the process of producing the steels. The steel mills will be cutting back, which can't be very good for Australian dollar. So I'll be keeping an eye out where it could probably lose out against the Canadian dollar or even New Zealand dollar a little bit lower. Excuse me. A quick roundup of what happened last week and what were the main drivers. So last week we had an eye on where yields are moving. Yields were sort of like stalling. We had a look at the BOC, where Bank of Canada is starting to slow the QE program ahead of most central banks, so that underpinned Canadian dollar against other currencies. Not so much against USD, but against most other counterparties. You found that Canadian dollar was performing quite strongly. We had a look at GBP AUD long and why it should be heading higher. There were Chinese tensions building up, and also RBA is intervening in the bond market and pouring Australian dollars in. We had a look at the possibility of EURNZD topping out, which by the looks of it did last week. We had quite a sharp reversal. EURCHF still on course to hit 120. It is currently playing about on a slower pace. So let me take this chart down for a second. We have a look at here. So recapping, so we have GBP AUD moved steadily higher last week. AUD NZD, we're looking for a reversal. I still think we can climb down back to our yearly open. EURCHF extremely slow mover, and the price action was very discouraging. So kept seeing it creeping higher and then coming all the way back down, creeping higher, coming all the way back down. But target is still a bust higher into new territory. The way things are headed. On the other hand, we also had a look at EuroCAD. We're looking for EuroCAD to hit 147 level. It hit the 147 level, actually dropped as much as 147.25 and crawled back up on the Thursday and the Friday. Next week we will have Canadian jobs on the Friday. I'm expecting these to be quite strong, in line with the United States, which should give us a good selling opportunity for EuroCAD into that event. We're going to next week. We will have Fed minutes, and we have the RBA meeting again. There's not a lot of expected from the Fed minutes. I'm really thinking this will be muted response. But on the RBA side, there could be a little bit more interesting things happening. So if they can come a little bit more dovish than already anticipated, they can obviously drop AUD pairs. Specifically, what I'm looking at is AUD NZD and AUD CAD. So we've got a little bit more down leg to go there if these things come together. So that's more a play that I would be looking into after the event is due past. And moving into Wednesday, you have a bit more Canadian dollar reports, and we have the Fed minutes. Again, a little bit muted response from the Fed minutes because they are in reactionary environment. There's not much happening on that end. So you could see a little bit more positive environment in terms of risk sentiment, underpin S&P 500 and also possibly drag dollar a little bit lower during these events. And then moving on to Thursday, we have Fed Powell speaking, and on Friday we will have Canadian dollar. So there's not a lot of data we can work with next week. Focus is really selling USD CAD around the jobs data from Canada and see if we can find a bullish narrative building on Tuesday and Wednesday. Catch a little bit on risk on moves, selling yen, possibly selling dollar if it materializes. I'll be more inquisitive what happens with the Fed funds futures, which I'll be showing you in a weak moment. That's sort of the main key things we're looking at just now. Let's start off with EURNZD, because that's the pair I wanted to, if you recall 2 weeks ago, we were looking to sell it, and it did some good downside, but then the new fiasco started with China and some retaliation with the Biden administration that caused NZD and AUD to collapse quite strongly, and that kind of pushed EURNZD higher as well. Now bringing up the yield chart of these two currencies, and the yield chart is looking in favor of a drop for EURNZD further. So your orange line is EURNZD, and the yield chart has already moved quite to a lower base. So I'm really looking for EURNZD to make all of its way back down to 166, ideally 165, start stabilizing for the next leg lower, and to continue the trend basically. So I'm still quite bearish EURNZD or EURKiwi. We had a bit of a hiccup obviously, but that's iron itself out, and I'm continuing to see it lower. I know a lot of people are looking at gold, so what I will do is I will show you Fed funds futures. This is a future contract where market can hedge their bets against what they think will happen in terms of interest rates in the United States, and it is a key driver for gold. Excuse me. Bring up the weekly chart, make a little bit more sense. So you can see market is by December 2023 expecting a couple of rate hikes, and that is not helping gold at all. So if I overlay this with gold for you, you'll be able to see that these two tend to move together quite strongly. Even if I bring up the chart from 2022 Fed funds futures, more or less the same scenario. So we see that the gold has done sort of a double bottom formation, but reality is Fed funds futures busted through those levels. I'm really looking for gold to follow through with that and start dipping lower with it as well in the following week. There's a lot of technical support at 1618 that's been cited, but I don't see any reason for that to really hold. It's more of a, if more longs established, there would be probably more fuel to the fire to drop it lower into 16 and 1500s per ounce. That's about gold. So we covered gold, we covered EURNZD. What I'm also looking at is EURUSD as we are entering the new quarter, which we did in April. So this is EURUSD. The daily candles, I'm expecting this downtrend to resume until we hit somewhere these levels, about 115, 116. Next week might prove a little bit tricky. We might not see the resumption straight away. Might next week see a little bit of consolidation, and then depending what happens on Wednesday and Thursday, there might be opportunity to get in onto the short side again. And the main idea is really why I'm looking to short EURNZD is because of the yield divergence on the 10-year in these two currencies that I showed you in the previous few videos. This chart here, so if I overlay EURUSD with it, you can see that over the last year yield chart started to come off, so the yield spread pointed to EURUSD lower. There was a bit of a divergence, and now EURUSD is starting to catch down with it. It hasn't really met those levels, which I would call EURUSD as sort of a equilibrium of value. There's still more downside to go on that end, and I would expect this to play out, really looking at the yields and the longer term as well. So we've got three potential trades: EURNZD, EURUSD short, and gold as well, touching back down. Not a lot of triggers, possibly Friday for EuroCAD, and then during the week we'll be looking to see what happens on Wednesday and Thursday to engage with EURUSD as well. So that'll be all from me. Next week is sort of still the beginning of the next quarter, so you're going to see a lot of volatility, which is really positive. That volatility will probably drag on until the 15th or so of April. After you're going to see some choppier markets. So if you are trading momentum, this is your month, and then as a month progresses, you're probably going to see price action volatility simmer down quite significantly, and you'll be trading more ranges again. Just something to keep in the back of your mind as you navigate through the month. Thank you.